Welcome to Tech Talk Tuesday. I'm your host, Carla, and with me is my fellow co-host and CMT, David Blake. It's Monday, July 15th, 2024, and we have some activity to talk about that happened in the stock market last week, along with some interesting things to look out moving forward. We do it mostly from a technical perspective. David, I hope you had a great weekend. How are you doing today?
I'm hot, but I had a good weekend.
Okay, yeah, it's definitely very hot and humid these days. Well, let's get started by taking a look at last week's market activity.
Look, actually, it turned out to be kind of a volatile week last week. It started out a little bit slow. We had some mixed trading to start the week out with Fed President Jerome Powell. He had his testimony on Capitol Hill last week, and investors were just kind of listening to that to make sure he was on the same page of getting some rate cuts later on in the year. And then on Thursday, we actually got another data point in the June CPI that triggered a nice rally. It was kind of a funny rally because, as we talk about the Magnificent Seven and how these stocks are overweighted, we had the Dow go up several hundred points, while we had the NASDAQ go down several hundred points. And that was basically a sign that we were getting a rotation, that a lot of investors, and especially hedge funds and that type of thing, were starting to take some profits, trim some of their positions in the big cap stocks, and now take a look at smaller caps. We've mentioned periodically here that as rates go down, small caps are one of the bigger beneficiaries of that, because it's cheaper for them to borrow money to build their business. And that's why you saw that 3% rally in there. And that was actually, we had some follow through on Friday in the Russell 2000. I think we had another 1.5% or 1% on Friday too. So we could actually, if you go look at the chart, if you look at IWM, you'll see that the Russell 2000 has pretty much been in a trading range that you can cross off if you take the trend lines and just draw across the top peaks of the chart from about January on, and then draw another line across from the bottom of the chart. You can see that we're breaking out to the upside. And generally, when you have a breakout like that of a big trading range, you'll get some follow through. I expect to see these things go a little bit higher here for a little bit, and then what we'll do is a lot of times it'll come back and test that breakout area. However, what to take a look is to see what's going to happen here going out a little bit. Okay, with that CPI, we did see yields drop a little bit. We actually saw them drop down to the lows from March, which was kind of nice to see. That was pretty much the market's expecting now that the Fed will cut rates in September. In fact, I think it was 92% chance that the first cut will be in September after the CPI last week. Now the PPI came in a little bit hot, but they're looking a little bit more at the CPI, and we actually have now priced in a second rate cut for December. So that's something that can probably keep a floor into the market going out through the rest of the year. Although I think it's going to be a pretty choppy market with the election and all that going forward. So anyway, when we got done, we had the NASDAQ able to squeak out another gain. It was up for a sixth straight week. S&P 500 was up for the fifth time in 6 weeks, and the Dow Jones was up for a second straight week. And we actually closed above 40,000 for the second time. So it's looking at a new high. In fact, here on Monday, we're going to see the major averages again make new highs. Dow, I think, look like the futures are up about 200 points as we're talking right now, about 20 minutes before the market opens. So again, we'll see the Dow join the party here and start to make some new highs. Now, with those lower rates, some of the things besides the small caps that we saw the mortgage rates drop down to about 6 7/8, and with that slide in the 7%. That really gave the home construction, home retail stocks, even like the Home Depots and Lowe's, they were up strongly. And the U.S. Home Construction ETF, ITB, was up 12% on the week. That's an awful big move. You may want to just see if you can get a better price on those. I think that maybe as things start to slow down, maybe the housing market's probably going to slow down too. So I don't think you need to chase that right here, but I do think the housing market will probably start to pick up here in 25. What to see. Oil prices had another volatile week. I think we did see a little bit of a gain. We saw oil drop down a little bit early in the week because of Hurricane Beryl, and then we saw that it wasn't going to really disrupt any of the oil supplies or any of the drilling out in the Gulf. So it started to move back later on in the week, and also because as the rates come down with the oil market, a lot of times just as rates are coming down, you're expecting that to increase economic activity, and that will create more demand for oil. So I think you'll probably see oil probably hold around probably 78 at the low end, and maybe we probably get up to around 86, 88 on that.
Okay, and which sectors of the market were the laggards and which ones were the leaders?
Okay, as far as lower rates on the horizon, the interest rate sensitive sectors were the top performers last week. That included REITs and utilities. And then that was followed by materials, healthcare, and industrials. And only communication services was lower last week. That was because Meta platforms and Google both not bad, but they were, especially Meta had a little bit of a pullback. I think it was like 520 down to 500 or something like that. So that was why that was the only one that was in the red last week. So that looks good. Okay, so this week, we do have a lot more second quarter earnings coming up, and housing data, and also some more manufacturing data.
Okay, and how is the technical condition of the market doing?
As far as the technical condition goes, we ended the week positive. We're still strong. I think we are approaching overbought territory once again, which is it's in a strong market, you're going to get that. We actually had on the point and figure charts on the Dow and everything like that. We did get a breakout to the upside. MarketEdge S&P short range oscillator, Jim Cramer's favorite oscillator. It closed Friday at 5 and almost 5.5. That's not real overbought, but it just shows that we're pushing up against the upper barrier. We also saw the 14-day RSI, which is real strong right now. It shows strong momentum. It was up in the 70s for the three big averages. So that's something that we want to watch in that. But we're watching the rotation out of some of this tech stuff. I think it's going to be a big rotation because those companies are still making a lot of money, and the AI stuff is going to keep propelling those big stocks higher. But I think it's just that when you have 100% gain in 6 months or 8 months or something like that, it's just wise to take a little bit of money off of the table. So I do think that things look good in here. MACD was crossing over into a bullish crossover. Even the Dow, it looks like it's just broken out of a double top. So I think we're going to be good on that. This broadening out of the rally is good. We've actually gone. I mentioned that out of the 91 industry groups that we follow, 51 of them now are either strong or improving, and that's up from 28 just 3 weeks ago. So this broadening shows a lot of stocks under accumulation. On Friday, we actually had 300 plus stocks making new highs. That's up from like 75 just a couple of days earlier. So that's an indication that we are getting new leadership as we're breaking out here to new highs. So that looks good. The Dow Jones Transportation Index also cleared some resistance last week. They had a descending trend line, and it closed above its 100-day moving average for the first time since April. So that's something that is bullish for the market. Again, I mentioned that AD lines, especially on the NYSE, and that's considered a leading indicator for market direction, had a real good week. I think we're somewhere around 3,500 to 4,000 new highs, and that's been chugging along here as the market's been kind of going sideways with some of these other indexes. Well, we were picking up less than 1,000 to the upside or downside for several weeks. That's also breaking out to a new high. If you go on the home page and you look at the market recap section, you can see that chart on that and see how that's going.
And how are we looking for investor sentiment?
Sentiment was still a little bit of a red flag. Everybody's bullish. Probably you're a little bit more bullish today, I think, because the polls after Sunday's debacle or Saturday's debacle, you saw that Trump went up a little bit. Trump went up in the polls, so that's probably a little bit more pro business. That would probably make people even more bullish. So the big story last week was that we got indications that we're going to have 2 rate cuts towards the end of the year, and that should keep a floor under stocks. And as we're in the process here of breaking out the new highs again, I think you just kind of sit on the sideline and and let the market come to you and sit along until we start to see some more bumps in the road. But I do think you probably will, between that and the fact that we're getting rate cuts, it will probably keep the market maybe going up a little bit longer than what we anticipated. But I do think it will be kind of pretty choppy once we get towards September and into October when we down to the nuts and bolts here of the election.
Okay, so, and then one important thing happened on Friday, actually, and we mentioned this could happen in last week's episode, and it did. So the market posture from MarketEdge switched last week. Can you touch base a little bit on what that market posture is and how that affects the market, and also with the negative CTI configuration?
Yeah, we've been talking that August isn't a very good month for the market, in September generally, and CTI it's based on different cycles going through, and we were getting towards the end of several cycles, so that the count went to a -3. Market, you don't want to have a negative CTI and a bullish posture, but so we switched it to neutral. But the market's got some ups, still has some upside in here. I wouldn't be chasing it here, although I think for fairly active traders, I think you can go in and out here, and the trade is going to be to the upside for a little bit longer. But it's just the fact that we're overbought and we're getting towards the end of several cycles that would keep the CTI to a -3, and I guess just that those two factors just break the posture down to a neutral. But I do think there's we're going higher when you have the NYSE AD line making new highs, and you have the the new highs, new lows breaking out, that kind of thing. You go with what's working, and that's telling you right now that we're going to move a little bit higher.
Last thing is, do we have anything to look out for this week?
Yeah, we do. Today we have Jerome Powell's giving another speech on the economy. I'm not sure where he's doing that or what time, but he has that going on through. We have a lot of earnings reports. Today we had BlackRock and Goldman Sachs. Goldman Sachs beat to the upside. BlackRock was a little bit weak. Late tomorrow, I think we have Bank of America, Schwab, Morgan Stanley. Thursday we have American Express. Wednesday's Blackstone. A lot of mega cap companies coming out. United Health Group is tomorrow. That's one of the Dow stocks. Johnson & Johnson, Abbott Labs, Netflix is this week. Taiwan Semiconductors. So that's something we want to look at. We also have retail sales coming out with industrial production too. And that we want to make sure with the retail sales, you just want to make sure that the consumer is still on board here. You don't want to see him pulling back too much, where he's running out of money and slowing down on his spending. It's a good indicator for the health of the consumer in the market, just to make sure that the consumer spending. That's good for the overall economy. So that will be good. And other than that, again, I think it would probably have some choppy trading just because of all of the different earnings reports that will be coming out. But nothing real big like we had last week with the FOMC and the inflation reports.
Okay, well, that gives us some things to look out going forward for this week. David, thank you so much for all the helpful information as usual. I think we have enough for a Tech Talk Tuesday episode for this week. We want to thank you to all of our listeners, and we will catch you guys next week.